In this video, we're going to be looking at equity crowdfunding. What exactly is it? Can normal people make lots of money from it? Is it too risky? How can we do it? And answers to many other questions.
This video will take a slightly different approach to our normal ones because we're new to this area ourselves. We know that many of you are too busy to research these things in any great detail, but are probably very interested in the money-making potential of equity crowdfunding. We certainly are.
At the time of making this video, we have not yet invested ourselves, but this video will be documenting everything that we find in our initial fact find. By the end of this video, we'll know whether equity crowdfunding is right for us, and hopefully you'll know whether it's right for you too. Let's check it out.
Welcome to MoneyUnshackled.com, the investing and finance channel that sets you and your finances free.
I'm Andy and that was Ben. Now let's get into the video. Why now? When we invest, we're always looking to maximise profits and minimise risk. But crucially, we've always tried to make investing as passive as possible, as up until now, we have never had the time to commit to thoroughly researching a company. You know how it is.
Those familiar with us on our channel will know that we usually stick to big established companies and mostly use investment products like ETFs.
However, as we announced in a recent video, our life circumstances have both changed for the better. That is, we waved goodbye to our wage masters and are now fully committed to growing our wealth and freedom. Hopefully this will be noticeable by the quality improvement to this channel. We'd really appreciate it if you would hit the like button and subscribe if you get any value from this video. This really does help the channel grow.
We now have the time to comprehensively research and assess companies, and getting involved at the startup phase of a company is really exciting. There is a possibility that you could be investing in the next Facebook or Uber and multiplying your initial investment 100 times over. We want to find out how likely this is.
Start with the basics. What is crowdfunding? If you ask a normal person on the street why they haven't started a business, they will probably say that you need money to start a business, and that is where their dreams die. In the past, this excuse was probably a real tangible problem. Phil Knight of Nike said his biggest struggles growing the Nike brand were not having enough money, since venture capital firms didn't provide funding then like they do today.
The internet and crowdfunding has changed all of that. Crowdfunding is a way for people, businesses and charities to raise money from a large number of people. Traditionally, if you wanted to finance a business, you'd have to ask a small number of people for large sums of money.
With crowdfunding, it means that if someone has an idea and the grit and the determination to succeed, then they can turn that idea into a business. No longer are entrepreneurs reliant on banks or a small number of venture capitalists for funding. From an investor's perspective like ours, it's really exciting because for the first time, normal people can invest in startups.
What are the different types of crowdfunding? There are actually a few different types, but the only ones that we're interested in is the investment crowdfunding. There are two types that we're not interested in, which are the donation-based crowdfunding and reward-based crowdfunding. Donation-based is where you gift money to a project, business or charity, and reward-based is where you might get something in return related to that product, like a discount or a free gift. Assuming you're watching this video to make money, like we are, then the types we are interested in are loan-based crowdfunding and equity-based crowdfunding.
Loan-based crowdfunding is just another name for peer-to-peer lending, and we've covered this many times on this channel already, and we know that many of you have already invested in peer-to-peer yourselves.
What we're now excited about is equity crowdfunding, which is where you invest in a business and receive a stake in return, normally shares.
What are the main equity crowdfunding sites? The two main sites in the UK are Crowdcube and Seedrs. As we've not yet invested ourselves, we can't vouch for these just yet. But we'll probably start with the big boys and let you know what we find. It'd be great to hear from those of you who have used either of these platforms to let us know what your experiences have been like in the comment section.
Here at MoneyUnshackled.com, we're always striving to bring you the best welcome offers on the internet, and we'll do our best to bring you some equity crowdfunding offers in due course. So it'll be worth checking the Money Unshackled offers page out before taking the plunge. If you're going to invest anyway, you may as well get a bonus on top.
How does crowdfunding work? It's not too complicated. You go to one of the sites such as the ones mentioned and you can view all the available investment opportunities. If we look at one randomly, we can see the pitch, how much they want to raise and the equity offered, what the money will be used for, amongst many other things. Looks like you need to register for the full pitch.
If we go back to the opportunities page, you'll notice there is different types of fundraising. As we can see, many are what are referred to as convertible. Obviously, it goes without saying that you need to understand what you are investing in before taking the jump. As we were looking at Seedrs, here is some of their documentation which will be worth checking out. You may be wondering what prevents the business from raising the money and then running off with it, which was actually our first concern. Platforms such as Seedrs will carry out due diligence on each pitch. It's quite extensive and will hopefully settle your nerves. We'll put a link in the description to the steps that Seedrs takes for those interested in reading more.
Success stories. We want to know what companies have raised capital successfully in the past, and Crowdcube has an awesome page telling us exactly that. If we look at Monzo, who we all know as the Challenger Bank, they raised £1 million in just 96 seconds in 2016 when the company was valued at £30 million. Just a few years later, they were continuing to raise capital, which valued the overall business at around £1 billion.
This meant that its value had increased 40 times more than the 2016 valuation. Just a few short months later, another investment valued the business at £2 billion. By our calculations, that is 67 times growth in about 3 years.
What is the minimum investment? Both the main platforms have a minimum investment from £10, which means it really is accessible to anyone. As with any investing, we would suggest you spread your investments over as many businesses that you can reasonably monitor.
An interesting feature from Seedrs that we'll be checking out is Auto Invest. You can set your investment criteria and let them handle it from here. This sounds very similar to what we use on the peer-to-peer lending sites and has helped us to make some very healthy returns by maximising diversification.
Is crowdfunding regulated? Whenever we invest in anything, we always look to see that it's regulated by the Financial Conduct Authority, FCA. I guess that's the only way that you know that something isn't a scam. And the FCA ensure that financial markets are honest, fair and effective so that consumers get a fair deal. They do this by regulating the conduct of certain businesses.
The good news is that crowdfunding platforms are regulated by the FCA, which means they must comply with a number of rules. This does not mean that your investment in these businesses done via the crowdfunding site are safe. If the businesses you invested in go bust, then you risk losing all your money.
The question is, how many firms raising cash via crowdfunding go bust? Thanks to a slightly outdated article by The Telegraph, which they so kindly put behind a paywall, 1 in 5 or 21% of companies that raise money through online crowdfunding went bust. Interestingly, this is much lower than the average for startups. According to the Office for National Statistics, just under 50% of all new businesses fail after 3 years.
What we can learn from this is that investing in just one company is risky and you have a fairly high chance of losing all your money. That's okay though, because we're smarter than that. What we want to know is, if we sufficiently diversify, what returns can we expect?
The lack of information here is slightly concerning. We couldn't find any reliable information. And we assume that equity crowdfunding hasn't got a long enough history to state any expected returns.
We did, however, find an article from Forbes, who in turn got their statistics from Seedrs. They are saying that over 250 companies, they had an average internal rate of return of 14.4% a year, whereas the FTSE All-Share Index over that same time period only returned 9%. Better still, there are extremely generous tax advantages to crowdfunding for high net worth investors. And for those eligible for these tax reliefs, the average return jumps to 41.9%.
Can you access your money? One of the most important things to us as investors is the ability to access our money. There's no point making a fantastic return on paper if there's no way of getting your hands on the cash. According to Crowdcube, they don't have a secondary market. In their words, hopefully the business will grow to a point where it floats on a stock market, is bought by a larger company, or the company management buy back equity from investors.
Or, in plain English, you have no control over accessing your money. Diddly squat. That's slightly concerning. Equity crowdfunding really is for the long term. On the plus side, it looks like Seedrs has a secondary market that is in beta, which by the sounds of it will give us much better access to our cash should we want to sell. We expect this will give the shares a market value, similar to those floated on a stock exchange.
What are the risks? No FSCS protection. This should be obvious as an investment. If the business, project or venture goes bust, you won't get any compensation.
Unknown returns, if any. Even if the business survives, it may not make a decent profit. There is a real chance of losing money.
Selling your investment could be difficult. As we just touched upon, you may not be able to exit your position, or you may have to sell at less than what you think it's worth.
Question of the day. What are your thoughts on equity crowdfunding? What else do you want to know about it? Let us know in the comments below.
Thanks for watching. On this channel we talk about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.